Last week, the online streaming world took a big step up. Time Warner decided to release all of their 2021 movies directly to HBO Max at exactly the same time as they are released in cinemas. Did Time Warner just kill cinema? What are cinemas going to do now, and what does this mean for Time Warner's parent company, AT&T? Welcome back everyone, my name's Paul. I'm pretty new to investing and I've taken the decision to start a dividend investment portfolio. My portfolio is currently sitting at 2264, which is an incredible amount of money to me. It's more money than I've ever seen before. But I'm not going to go too much into the portfolio today. I'm going to save that for the end of the week. But as part of a dividend investment portfolio, a lot of people have AT&T. And AT&T made pretty huge news this week by effectively causing the collapse of cinema. AT&T and Time Warner haven't single-handedly done this. This has kind of been coming for a while. They're just the first company to actually come out and do it. It's quite a risk, and a lot of analysts have considered this as a bold move. But really, it was going to happen anyway. Disney has been hinting at this now for a considerable time, and Netflix was never doing it at all. But last week, Warner Brothers made the decision to release all of its 2021 movies straight to HBO Max, and then release them to cinema at the same time. And now we have to figure out what this is going to do to cinemas. In 2021, Time Warner is supposed to be releasing some big titles like The Matrix 4, probably a film that we didn't really need. Gal Gadot is coming straight to your TV at Christmas. And The Suicide Squad is coming out, which I can only assume is a remake of the one from last year or the year before, which was really crap, right? But apparently someone likes these films so much that they're willing to pay £15 to £20 to go sit on some broken seats in a dirty cinema to watch it. And Time Warner has now decided, why don't we let the customer decide? Christopher Nolan isn't very happy, who is one of the big directors behind Time Warner. He's always been a big pusher of theatrical releases, saying that he will never work for Netflix. He says it's all about the big screen and creators should decide where they want to show their movies. But I can't help but think that content should be viewed where the customer wants to view it. And also, I guess Christopher Nolan will probably lose a lot of money by it not being in theatres. His movie payoff is going to be directly correlated to how well it does at the box office. So it makes sense for him to want it in the cinema. It hasn't stopped him going on the attack though, and there may be a risk now that some of these directors and movie stars might decide to start boycotting. But the thing is, they might start to just go to where the money is, and we know that Netflix pays the most amount of money in development. AMC, which is one of the leading cinema chains in the US, is not happy. AMC and in the UK, CINEWORLD have done pretty terribly during this pandemic. Everything's been shut down, so they haven't been able to sell tickets. Movie production and releases have also been on hold for what feels like forever. But is the pandemic really the reason why the cinemas are now doing so poorly? When we look at AMC Entertainment in the US, we see an absolute mess of a company. AMC was already at least 7% down before the pandemic. Its earnings are absolutely shocking, and all it's done for the past 5 years is take on debt. If you've watched any of my videos before, you'll know that I am not a fan of theatres. They are overpriced, messy, and totally unprofitable. I just don't understand how the large-scale cinema business exists. Even CINEWORLD has had to finance the hell out of itself to get itself to grow. This thing is going to have no profits for years. But it is a recovery play that is technically in value. A lot of people have probably made a lot of money trading it over the past few months. AMC has said that it's going to do everything within its power to aggressively pursue economic terms that preserve their business. I'd say good luck with that because I don't think they've got a leg to stand on at the moment. But I hold AT&T, and while this news is supposed to be bold and brash and disruptive, it didn't do much to the share price. In fact, there's been nothing but good news about AT&T recently, changing its management up, making some new decisions, and now finally really pushing for this streaming service. But investor sentiment is just still not there. There's absolutely no good news out there that seems to want to move AT&T's price. But the company's fundamentals aren't anything like a company like AMC. It's got very steady revenue growth and it's got a good profit margin. And it's just considered to be one of those old dinosaur companies. But it also doesn't follow the trend of one of these old companies either. Take IBM for example, which was one of the biggest companies in the world, just like AT&T. IBM's share price has been on a steady decline for the past 10 years, but so have its revenues. AT&T is very different. Its share price is on the decline for the past 5 years, but its revenues have only gone up. If fundamentals really do matter, then AT&T should be considered at very good value at the moment. AT&T has a very strong base in the communications sector. It sells mobile phones and other communications products to lots of different businesses. And between 2017 and now, the communications revenue has been declining. It's only declining very slightly. It's a little too early to say that it's definitely a long-term decline. But there are issues facing it with the Internet of Things and 5G coming in the future. They're not considered to have a very good strategy for all this. However, when you add the Warner Media revenues, the revenue stream goes up quite considerably. This is their new business. This is where AT&T now want to continue to grow. But it relies a lot on HBO Max and it relies a lot on their movie releases being very profitable. And I think the only bit of news that could really get AT&T moving is getting a deal with Roku. And HBO Max hasn't been a brilliant startup. They haven't got everything wrong from day one, but there's a lot of things that they really just should have known and they should have sorted out. Like getting Roku on board. Roku has a 30% market share of the home streaming service. Most people probably wouldn't know that, because you would have thought that Amazon, Apple and Google all have a pretty good share of it. But no, it's Roku. And HBO Max is the only one which hasn't struck a deal with Roku. Time Warner and AT&T are still missing out on 30% of the streaming market, even 6 months after we knew they needed to get it. And even this news of the release of the movies hasn't really changed Roku's mind. Roku want a really good deal out of HBO Max and they're not really willing to move. They know they're in a really good position, and I think that AT&T need Roku more than Roku needs AT&T. And while I'm not investing in Roku now, I do understand how Roku is going to be one of the biggest streaming services out there. Because now we've cleared cinemas out the way, the next step for the online streaming world is for a company to bring everything together. At present, you've got Disney, you've got HBO Max, you've got Netflix, you've got Amazon, all in their own little bubbles. They've all got their own content and their own hit movies that they're trying to keep to themselves. This just makes it worse for the consumer, because the consumer has to go out and get multiple different subscription services to watch the films that they want to watch. Eventually, the losers in this field are going to give up and have to sell their content to the other providers. In the meantime, the worst subscription services are going to lose a lot of money trying to keep up. This is how the record industry fell. Data from the record industry shows that everyone benefited when everything went into one streaming service. So when every type of music was available to Apple and Spotify, everyone did better. There's no reason to think why this wouldn't be any different for the online movie business. So if you're looking for a growth company or a recovery company in this sector, you don't want to be looking at theatres. You want to be looking at a company that's going to bring all of these movies together in one platform. Roku's possible, Spotify's possible, Netflix is too closed off now. I don't think Netflix is going to be a disruptor in the future. Netflix is spending way more money than anyone else on content, so it really could. But to do this, it has to crush and strangle all of the competition, so all of the competition wants to be on its platform. I don't see it yet. I don't see it as making it better, faster and cheaper for the customer. But Roku, if it can get everyone in one place, could start to take advantage of that. For now, I'm with AT&T. If AT&T stays flat for the next 10 years, I'll make 7% on it. And I'm pretty happy with that. The dividend does seem to be very safe, and when it gets itself onto Roku at a pretty good price, we'll start to see the share price appreciate. I'm sure of it. However, do not think that AT&T is going to make you a millionaire next week. AT&T is a very slow and steady stock that is getting out of some really bad management decisions over the past 5 years. There's light at the end of the tunnel though, and I think 2020 and 2021 are going to be a turnaround time for AT&T. Thank you very much for watching everyone. The investment app that I use is called Trading 212. If you wanted to get into investing and start investing in Roku or AT&T, you can get started by visiting the link in the description below. If you sign up through that link, you can get a free share that's worth up to £100. Feel free to tell me exactly what you think about AT&T in the comments below. People love telling me exactly what they think of AT&T. And we can keep up the discussion as much as you want in the free Discord. Also, don't forget to check me out on Instagram. I post there about twice a week. And if you found this video interesting, please feel free to like, subscribe, and invest.